Hello, ladies traders and gentlemen traders. My name's Lai Nhat Hoai. I'm the senior editor and head of YouTube of TraderViet.com. And TraderViet is one of the biggest and largest communities for traders in Vietnam. I have collected trading experience in the Forex and the cryptocurrency market. And my trading method, is the world-renowned price action trading. And I know that I have to stop talking about myself right now because I know that none of you want to listen about myself. So what I want to talk with you about today is how to use price action trading to gain profit in cryptocurrency market. And what I want to share with you is not only this. I want to share another story. I want to share about how to trade without stress and be able to enjoy life at the same time. You know that trading in traditional financial markets like Forex and commodities or the stock markets is stressful enough. But trading in the crypto market is twice as stressful because of the wide volatilities of Bitcoin and altcoins. But by natures, we always love volatile things, right? And we are all humans. So we choose to trade Bitcoin because it's volatile. So what is price action? Price action is a trading method based on the action of the price. Which means that we don't need any kind of indicators or tools or fundamental analysis. What we need is just the price action. So how can we do that? How does it work? Price action traders believe that every moment, every actions and every thought of all traders that participate in the market is reflected in the price, which means price discounts everything. So that we just need to analyze the price, and that's enough. We don't need to analyze any other kind of information. So the first thing that I want you to do is not keeping your chart like this, full of indicators and technical tools. What I want you to do is to delete all technical indicators and keep a plain and naked chart like this. This is the naked chart of Bitcoin. And this is very beautiful price action, right? And another thing that I want you to do is to use the black and white colors for your candles, because that kind of color will present the price action itself very clearly. So we will get to the main part of my sharing. The three most powerful price action patterns. So what are they? So we have another question here. Why we need price action patterns? What do they do? Many of you may know that in trading, the hardest question is when to enter the trade. The timing, or the when, is the most important thing, and it decides the final result of your trading plan. You have a well-prepared trading plan. You analyze the trend, you identify key levels, support and resistance, and then you enter at the wrong time, too soon or too late, and then you lose. So the price action patterns answer the timing question for you. The price action patterns could be a one candle pattern or a multiple candle pattern. And then when it shows up, we know that the time to enter the trade has come. Another problem is where to place the stop loss. So the price action patterns themselves have the exact positions for us to place our stop loss. And they are very natural and pure. We don't need to think about where to place our stop loss. So the three most powerful price action patterns are these: the pin bar, the inside bar, and the facade, which is also called the inside bar false breakout. First pattern, pin bar. What is a pin bar? It's a one candle price action pattern, only one candle, very simple. It has a long tail and a small body. You see that? This one also has a long tail, upper tail, and a small body. And the body has to be close to the nose or the head of the pin bar, right there. It has to be close to the head of the pin bar. I think the pin bar is one of the most important candle in the chart because it gives us one of the most important clues that the market is going to reverse. Like this. This is the bullish pin bar and it reversed the trend from down to up. And this is the bearish pin bar. It reversed the trend from up to down. So why? Why? You imagine that on the day that the pin bar has formed, the market has fell to this point and it made a very strong buying pressure upwards and push it upwards to close on the upwards, on the upside, so that there's a strong buying pressure down here. Okay? Over here, just the same. This pin bar, at the time this pin bar is formed, the market rise to this point and was pushed down by a strong selling pressure and have to close on the downside. So that's the clue that the market is going to reverse. So how can we trade this pin bar? We have three ways of entering our orders based on the pin bar. First, we place a stop order, buy stop or sell stop. This is a bullish pin bar, so we place a buy stop on the nose of the pin bar and stop loss off the tail of the pin bar. That's the first place. The second way, we can enter at the limit order. This is the bearish pin bar, so we place a sell limit right here at the 15% of the pin bar's length. So at this way, we have an advantage of the risk-reward ratio. So but we stand a risk of not being the market if the market not retrace to this point and then go downward. And the final one, we enter at the market price when the pin bar closes. But this is the worst of all three. I'm not recommending it because it doesn't have the breakout momentum of the stop entry or the risk-reward ratio advantage of the limit entry. We see some examples of the pin bars on the Bitcoin chart. Very beautiful, strong upward movements after the pin bar here. You see that? This pin bar in the middle is a little bit small, but it also enough strong to create a strong upward movements upwards. This one is not enough strong, but it also shows a little bit of buying pressure. The next is the inside bar. So the inside bar, it could be typically the two candles pattern, but sometimes it could be a multiple candle patterns. If is it a two candle pattern, it has one candle is called the mother bar, and the second is the inside bar. The mother bar has to contain the whole high and low of the inside bar inside. And the inside bar tells us that the market is pausing or moving sideways. You imagine a compressed spring. When it pushes it down, when it spread out, it spread very far and very strong. See that? This inside bar is one kind of the Davos box from the master Nicholas Davos, a master stock trader from the 20th century. So how to trade the inside bar? We have two cases to enter our orders with the inside bar. First, if the inside bar is placed not at a key level on the chart, which means it's not at one support or resistance, we will expect it will continue the previous trend. So for example, this is a bearish inside bar and previous trend is down. We expect price to break out downwards and continue the downtrend. The second case, if the inside bar is at or from at an important level, like a support or resistance, we will expect it to reverse the trend. For example, the inside bar in the middle. If the trend is downward, previous trend is downward before the inside bar, we will expect the market will reverse and continue to go upwards. So we place a buy stop at the high of the middle bar and stop loss at the low. So we see some examples of the inside bar patterns. Inside bars, the first case, following previous trend, very beautiful inside bars of the Bitcoin. You see that the first inside bar setup here, it has a multiple inside bar setups here, and it creates a strong movement upwards. And the inside bar after that, it continues the uptrend. Before that, you see that? So we place a buy stop above right here and stop loss below here. Just like that, when we see an inside bar that we expected to continue the uptrend, we place a buy stop above the high of the mother bar and stop loss above the low. Next is the inside bar kind of reversing trend. I have the example from the Ethereum. So one important condition for inside bar to reverse the trend is it had to form at an important support or resistance level. These two very important resistance levels. You see that? Very important, very strong. This one used to be a support, but when it was broken down, it becomes a resistance. So when the two inside bars here, the three inside bars here, it happens just like beneath the resistance level. We continue to place our sell stop below here and stop loss above here. So the final one is the bearish and the bullish fakey pattern. The fakey by nature is also an inside bar. You see that? The first two candles here is the inside bar, but it plus a false breakout after the inside bar. The false breakout could be two candles. You see that? The first candle breaks up, and then right after that, at the next candle, it goes down. This is a false break. Just like that, the markets break down at this candle, and at the next candle, it breaks up. So this is also a false break. So we expect the market to continue going the opposite directions of the false break. So this is the bullish fakey and this is the bearish fakey. Also, the false break could also be at the form of a pin bar. The same story happens here. The market breaks up and then it goes down. The market breaks down and then it goes upside. We see some examples of the bearish and the bullish fakey. On the Bitcoin, you see that this is a bearish fakey. It has a false break in the form of a pin bar, and it caused the market to fall lower. This is a bullish fakey, but it doesn't cause any price to rise because the dominant trend is down. So we come to the final part of my sharing. Because the price action patterns many times happen, it fails, and it doesn't go to the way we expected. So we need some kind of filters to choose the more beautiful and more qualified patterns. So how to increase our win rate? First, we choose the trend and the position of the patterns. The trend, we follow the trend. We only trade the trend. We only trade the price action patterns that following the trend, which means that we trade the bullish pattern in an uptrend and a bearish pattern in a downtrend. And the next is the position. We choose only the position, beautiful position of the, we see here. Back to the example of the Bitcoin, we see that this one, bearish fakey, and bearish fakey also work. But this is a bullish fakey in the downtrend. So you see that this is a bullish fakey failure. The position expect. These two bearish Fackie and bearish pin bar happen at a very strong resistance, so it ignites a very strong sell-ups after that. This pin bar also creates a strong sell-off, but if you sell here, we will be stopped out because this is not happen at a strong resistance. The second filter is size. We only choose the price action patterns that has the size relatively to the previous candles. So we don't choose the price action patterns that have long short tails or small size. You see, the two pin bars here are kind of small relatively to the previous candles, so it failed. The bearish pin bar, but the price go up, and the bullish pin bar, but price go down. But these two pin bars have very long upper tails and kind of big and large relatively to the previous candles. So it creates a very strong sell-off like here. See? And the final one is the time. I mean the time the market needs to form a price action pattern. The longer the market needs to form a price action pattern, the more likely it will be successful. You pay attention here. The market needs 1, 2, 3, 4, 5 days to create this swing low, but it only needs 48 hours to rise back and retest the resistance. So the pin bar here is most likely to fail because the buying momentum is still high. So we see it fail. Instead, if the market takes longer time below the resistance and we have more space in time here, so this is the bearish pin bar, a very beautiful bearish pin bar we want to trade. So that's it. We have the pin bar, the inside bar, and the Fackie pattern. And we add some kind of filters about trend, the position, and size of the patterns, and the time that the market needs to form the price action pattern. So that's enough to trade price action in the crypto market. So one last thing I want you to remember in your mind when you use this price action method is to keep it simple. When you have mastered this method, price action trading, you can trade and enjoy your life at the same time. Thank you for your listening.